In Asia, stocks were lower today following an overnight sell-off on Wall Street sparked by concerns of a slowdown in the global economy. The Shanghai Composite slipped 0.82% and the Shenzhen Composite was lower by 0.813%. Japan's Nikkei 225 fell 1.82% while the Topix Index declined by 1.99%. Over in South Korea, the Kospi slipped 0.43% as shares of chipmaker SK Hynix declined by 1.77%. The ASX 200 in Australia also fell and was lower by 1.22%. In the U.S., futures pointed to a slight recovery for the three major stock indices after the market rout a day earlier. The Dow Jones Industrial Average Futures climbed 30 points, implying a gain of 100.02 for the index at Tuesday's market open. As of 4:40 a.m. Eastern Time Tuesday, S&P 500 and Nasdaq futures also pointed to slight gains for the two other major stock indices. As stocks had fallen sharply on Monday ahead of the Federal Reserve Bank's anticipated rate hike this week. The Fed is widely expected to hike its benchmark overnight lending rate for a fourth and final time of 2018 when it concludes a two-day policy meeting on Wednesday. While fears of rising interest rates have spooked markets throughout the year, such concerns have heightened over the past month as inflation and growth expectations recede. And to commodities market update, and today we are focusing on gold. International gold prices rose slightly today ahead of a key U.S. Federal Reserve meeting as speculation that signs of economic turbulence may prompt the central bank to put brakes soon on its monetary tightening cycle kept the dollar under pressure. Well, let's bring in one of the research analysts with Financial Derivatives Company to look at the trend in the gold market, particularly as Nigeria opens its first gold refinery. Desola Simoni joins us now via Skype from the UK. Hello, Desola. Good afternoon. Thank you very much for joining us.
Hi, Chimeze. Good afternoon, and thank you for having me.
So the price of gold has fallen by about 2.1% in 2018 so far. There is an inverse relationship between the price of gold and the value of the US dollar. What are your expectations for the price of gold this year and early 2019?
Thank you for that question, Chimeze. The inverse relationship between the price of gold and the value of the US dollar comes from the fact that gold is denominated in US dollars. Consequently, whenever the US dollar strengthens against a basket of other currencies, we find that the commodity gold becomes more expensive to the holders of these other currencies, and consequently demand declines and price also declines. It is interesting to note that the dollar has strengthened by 3.2% against the basket of other currencies yet to date. It's also interesting to note that the price of gold has a positive and a direct relationship with economic uncertainty and geopolitical tensions. For instance, where there's volatility in the global markets, we see that investors move their money from other asset classes to gold, which is considered a safe haven asset because of its intrinsic value. The idea behind this is simply to hedge against risk. So back to your question about my expectations for gold for the rest of the year and 2019. I think it depends. It will be influenced heavily by the decision by the US Fed tomorrow. If the consensus is that the US Fed will increase the benchmark interest rate by 25 basis points, this is likely to strengthen the US dollar and cause the demand for gold to decline and the price of gold to also decline. However, okay. Thank you. I'll stop there.
All right, let's bring it home now. Nigeria is to open its first gold refinery in 2019 and is to produce about 36 metric tons compared to Ghana's output of 135 metric tons. Now, what will be the impact of this on the Nigerian economy?
First of all, I must say this is very good news. This is positive. It is expected to have a positive effect on the Nigerian economy, on the mining sector, and on the gold value chain. So first of all, it is expected to create jobs in the mining sector, and the fact that Nigeria will begin to refine gold locally is likely to reduce the demand for imported gold, which is likely to reduce our import bill, which is supportive of our trade position. The fact that we also begin to refine gold locally is also positive in the sense that we will now begin to export to other countries with huge demand for gold, for instance, India. And this is good for our export diversification. It will generate some more export revenue and to also support our trade position. So this is a very positive development for Nigeria.
Now, one of the biggest users of gold is India, especially for their lavish weddings. Nigeria has a huge trade imbalance with India of about $15.6 billion. Is this gold refinery strategy to partially address the trade imbalance, which, of course, is currently in Nigeria's favor?
Again, India is one of Nigeria's major trading partners, and we export a lot of oil to India. Coincidentally, India also has a very huge demand for gold. So now that Nigeria is exporting, would begin to refine gold locally, it may begin to export some of it to India, which will further, diversify our exports to India and strengthen the trade relationship between Nigeria and India. It is likely to, increase export revenue to Nigeria and overall, yeah. So that's. And yes, further strengthen the surplus that you already said. So we'll have more surplus with our trade with India.
So what is the level of Nigeria's gold reserves, and is it likely to increase as Nigeria seeks to diversify its external reserves away from over-concentration on the US dollar?
According to the World Gold Council, Nigeria has about 21.4 tons of gold in its external reserves. So now that Nigeria will begin to refine gold locally, I expect that the central bank would increase its holdings of gold. So which is in line with the idea or the plan by the central bank to diversify away from holding so much dollars to also holding some other assets like gold. So I think yes, producing gold locally would increase the holdings of gold by the central bank.
All right. Thank you very much for your time, Desola. Desola
Thank you for having me.
Is one of the research analysts with Financial Derivatives Company. An Italian judge has accused oil majors Eni and Royal Dutch Shell of being fully aware that their 2011 purchase of a Nigerian oil field will result in corrupt payments to Nigerian politicians and officials. Italy's Eni and Shell bought the OPL 245 offshore field for about $1.3 billion in a deal that spawned one of the industry's largest corruption scandals. It is alleged that about $1.1 billion of the total was siphoned to agents and middlemen. The Milan judge made the comment in her written reasons for the September conviction of Nigerian Emeka Obi and Italian Giuliano Donato, both middlemen in the OPL 245 deal for corruption. The pair were jailed for 4 years. Under the deal, Eni and Shell jointly acquired the OPL 245 field from a company owned by former Nigerian oil minister Dan Etete, who was convicted of money laundering in an unrelated case in France in 2007. And oil prices dropped over 1% today, falling for a third straight session as reports of inventory builds and forecast of record shale output in the United States, currently the world's biggest producer, stoked worries about oversupply. International benchmark Brent crude oil futures were at $58.90 per barrel, down 1.2% from their last close. Brent has fallen more than 4% in the past 3 sessions so far. U.S. West Texas Intermediate crude futures were down 1.2% at $49.27 per barrel. Both U.S. crude and Brent have shared more than 30% from early October and swelling global inventories, with WTI currently trading at levels not seen since October 2017. We'll take a quick break, and when we return, we'll cross over to the Nigerian Stock Exchange for an update on today's trading activities. To stay with us.